Hello, everyone. Welcome back to Wealth Wednesday. Today, we are going to talk about mortgages. But before that, I'm Jane, your financial and investment coach. What are mortgages basically? Mortgages are simply where a borrower goes to a bank or a financial institutions that lends money so that someone can borrow and get a loan that will be able to help them in either getting a real estate property, either a house or basically a real estate property. So someone agrees to pay over a period of time, and with that one, that is now what is referred to as mortgage. And sometimes mortgages can often take from 15 years to 30 years, depending on the amount and also depending on the interest rate that is being charged on that amount. And so most people will often go getting mortgages because sometimes people look at it like this: I can get mortgage instead of paying rent. But there are things that people need to consider before making that decision. So today is an interesting session. I'm going to take you through one of the stories that I wrote in my book back in 2023. And it's quite an interesting story that I thought today I'm going to read out. Don't worry, I'm not that much of a good story reader, but at least stay tuned and listen to this story that is here with us. And this story is, the title is The Tale of the Mortgage Lessons. And the story goes like this. It was a warm Saturday morning in Tindigua when James and Peter, old university classmates, stood side by side, each holding a shiny new house key. They had both just become home owners. It's a good feeling. But how they got there and what came after was a tale of two very different financial paths. Let's look at Peter. Peter rushed into the dream. Peter had always believed that owning a house was the ultimate sign of success. The moment he got a promotion, he was at 32 years, he couldn't wait to join the League of Home Owners. He walked into the first bank that offered him a mortgage and signed the paperwork without fully understanding the terms. His excitement was so high, he didn't read the fine print. He just wanted in. He bought a very beautiful 4-bedroom townhouse in a gated community priced at 15 million. He had no savings, so he took 100% mortgage. The monthly repayment were hefty at about around shilling 158,000 and stretched over 25 years with a variable rate interest rate of 12%. At first, he enjoyed the glory. Friends visited, social media loved it, but within 2 years, cracks began to show. The interest rate was variable and it shot up. He had no emergency fund, so when he had a medical issue, he borrowed more. He struggled to maintain the home, pay bills, and meet his loan obligations. Then came the real blow: a job loss during COVID-19. Within 3 months, he defaulted his loan. The bank threatened repossession. Peter's dream home was slipping through his fingers. It became clear he had bought more than he could afford, but had no plan, no plan to fall back on. Let's look at James. James was the strategic planner. James took a different route. When he started earning, he rented modestly and saved diligently. He researched mortgages, attended home ownership forums, and even spoke with financial advisors. He created a 7-year plan. He opened a dedicated savings account for a 20% home deposit. That was his first plan. The second one, he built a credit history to qualify for a lower interest rate. He joined a housing cooperative circle to access cheaper financing. And the fourth strategy that he did, he set up an emergency fund equal to 6 months of his expenses. By year 6, James had saved around shilling 3 million and found a 4-bedroom home in a developing area for shilling that was going for shilling 10 million. He took a 10-year mortgage, locked in a fixed rate of 12%, and structured the repayments at no more than 40% of his income. James still had room to invest, travel, and live comfortably. Most importantly, when the pandemic hit and his salary was reduced, he dipped into his emergency fund and avoided default. By year 1, he began making extra payments, aiming to finish the mortgage earlier than the decided time, that was 10 years. His mortgage. His house had appreciated in value, and he was already planning to buy a second property for rental income. He had peace of mind, financial breathing space, and a vision for early retirement. At a community fundraiser, Peter looked at James and said, "I rushed to look successful. You plan to become secure. Big difference." James replied, "Mortgages aren't bad, but they must come with a plan, not pressure." And so that is the interesting story that I wrote from my book. It's on page 130 to 132. If you will be interested in getting this copy, we retail it at 1,000 Kenya shillings. And how you can get it, you can call this number 0743 000 or you can go to our description or our website at www.japesh.com and you can order the book from there. There are so many sweet stories like Peter and James that helps you to learn on what to go about it and how not to go about it in terms of all the financial goals that you have. Let's look at the moral of the story. A household should be a blessing, not a burden. Mortgages can be a powerful tool, but only when used wisely. Rushing into home ownership without savings or research or a financial caution can turn your dream into a nightmare. Planning, savings, and understanding the terms of borrowing makes the journey sustainable and your future richer. So that is the moral of the story. Remember, if you're planning to get mortgages, you can come to me as your financial and investment coach. We look at the pros and the cons before you start your journey. We can also go through the other options. I'm not saying mortgages are bad. They're really, really good, but at least they really need a very good financial plan because they're always long term. So without a proper plan, you will end up like our friend, the one that didn't have a good proper plan, Peter, from the story. And there are some of the key questions that you need to ask yourself before taking mortgages. I'll do a next video and expound on the 10 questions that you need to ask yourself before you take mortgage. We will delve that in our next video so that at least we can look at what mistakes Peter made and what good things that James did, so that with that you can have a clear vision before you take mortgages. Like I said, the book has more and more interesting stories, so at least get a copy from us. It will be a very good read that is worth reading. The book has 9 topics, and all the topics have very sweet stories.